Okay, so here we're ready to go. We're ready to go. Okay, let's. Okay, so guys, we're good to go. How many people on the? Do you have people on the call yet? I actually sent. Okay, guys. So while we're waiting, we have one. Okay. Hi guys, good evening to you from wherever you're joining from. Good evening, super good evening to everyone. We are doing. So if you are live on the call with me right now, just type in where you're joining in from, your name and where you're joining in from. Let's have it. I hope you guys can hear me. So type in your name and where you're joining from. Type in your name and where you're joining from. Okay, guys. Type in your name and where you're joining the call from this evening. If you're on the call. Okay. Awesome, awesome, Akimade, Emmanuel, good to have you on the call. Opayemi Ajana from Ogun State, good to have you on the call. Okay, where's my, one moment, please. Okay. Yeah, I can see Akimade Emmanuel. That's Pastor Pastor Akimade Emmanuel. Good to have you. Good to have everyone on the call. Okay. We just give a few minutes. Let's to have more people join us on the call tonight. Okay, so that uh, let's have a few minutes to have more people join us on the call. Okay, so while we're waiting, yeah, Pastor Emmanuel Akimade from Lagos. Good to have you. Good to have you. Super, super good evening. Okay, just a little more, time to have more people on the call, and then we are good to go in 10 minutes. At the clock of 10 minutes, the meeting starts. Great, guys. Great, guys. Okay. So on the call, good to everyone. So I see more people joining us. Just put in the name of where your name and where you're joining us from. Just put that in the chat box. I see more people joining us. Just put in the name of where your name and where you're joining us from. Just put that in the chat box. Okay. So we're gonna get started because we don't have so much time. We're just gonna get this day one of this bootcamp. I'm just gonna start by introducing myself. So my name is Ayola Dimeji, and I am a billionaire investor. I call myself the billionaire investor, and that's because that's my aspiration. That's where I want to go. That's where I want to be. That's who I want to be. Okay, ladies and gentlemen, it's for over 2017 precisely. I remember thinking, looking at myself, looking at everything I was doing, the businesses I was doing. I was telling myself, you know what? Ayo, you need to add something to this. Now, please let me be sure if you can hear me. Could you please type in one in the chat box if you can hear me? Type in the one in the chat box. Just put in the one in the chat box if you can hear me loud and clear. If I'm loud and clear, put in the chat a one in the chat box. Okay, one. Oh, great, great, superb, guys, superb. So I I was really I started thinking about, uh, what I could do, to understand investment, the financial market. I'd been an enthusiast of the stock market for I mean, when I was in school. would always buy business daily. I think that's the name. No, Financial Times. That was the name of that newspaper. Then I would always buy Financial Times only because I wanted to check out the stock stage, the stock market. I didn't do anything around finance. I was not really schooled as far as finance was concerned. I just had that interest. My dad always talked about stock. So I used to go to the post office to go and collect my dad's dividends, warrant, and all of that. So those days, I was always wondering, wow, this dividend that meant so much to my dad. And then he would tell me that, okay, this from the shares he bought. And, he just gave me a little idea into what, the concept of shareholding and all of that was all about. And that was where I picked interest from. So I would always spend my money to go and buy Financial Times, try to interpret all the figures and data, but I was studying English from school. Fast forward to when I finished school, I went in for my master's. I came back and I got involved in network marketing business and sales business. I was making some good money, and then I was thinking about investment. Okay, so where can I put in this money? What can I do? And that was just about the time, the cryptocurrency was opening up to the whole world, and then I stumbled on a friend who introduced me to the forex market. At initially, I was not sure about the forex market, but I decided to learn what this was all about, and we just picked it up from there, guys. And I picked some really strong interest. 2017, I started learning how to trade forex, and I learned from one of the best forex coaches in Africa, Mayo Wolabi. So fast forward, I joined a company called, a forex educational company, and I started learning forex also on their platform. Joined with some sales business, and that was where it all started from for me. And it's of course it's been so liberating. I made a lot of mistakes getting started. I made a lot of mistakes, got it all wrong. In fact, the I think the group of guys that we started learning forex those times, a lot of us got it wrong because we learned forex the wrong way. But over time, a lot of things started correcting themselves. We started learning how not to do it, how to do it, what's the most important thing. And let me tell you, one of the biggest mistakes we made those days, learning how to trade forex, was trying to learn everything. So I tell every forex mentees that I have today, I say, what you need is to learn, just have a guided learning, have a guided education as far as the forex market is concerned. There are many things about the forex market. The forex market is wide, and I can say it's complex. It can be complex if you are trying to learn a whole lot of things, if you are trying to know everything. There are many techniques, many information, many data, many strategies that can help you to win or to lose in the forex market. So it's all about you having the right information. And for me, I've seen that this concept of people not having the right information, or the guided information, is one of the things that led to failures of a lot of people in the forex market. And I do that with a lot of my mentees and students. And I thought that's one of the things one of the value I want to bring to this call tonight. Welcome, Kayode from Ogun State. Welcome, Kayode. Yeah, Kayode, good to have you on the call. Great. So I felt that that's one of the biggest value I'm going to be giving to us on this 3-day bootcamp. So let me quickly give us what the outline of this bootcamp is going to look like. So day one is going to pretty much serve a lot of value to especially people who are very new, very fresh to the forex market. This is your first time. By the way, if you don't mind, can you put your level of experience in the forex market in the chat box? Let me know. So how long have you been learning forex trading, or how long has your experience been in the forex market? Do you mind putting it? Okay. Do you mind putting it? One 1 year, 6 months, 2 years, 3 years. Let's put that in the chat box. Let's put that in the chat box. How long has your experience been in the forex market? Okay. Okay. I hope you guys can hear me. Okay. Yeah. Okay. Great. Coyote showing 3 years. 3 years in the forex market. Olua Coyote. Great. That's great. So yeah. So the one is really going to be add a lot of value to, especially for people. I mean, it's basic information that's very important to get started forex trading. This is one of the things we are going to be looking at. Day one, understand what forex is, understand basic concepts around forex, basic fact about forex trading. Oh, great. Emmanuel Olushola, 1 year. That okay, that's good. So we look at um yeah, we are going to look at some basic terms about the forex market, those key stuff you need to understand, and just all of those fundamental topics as far as getting started is concerned. And then we're going to take it from there. Day two, we are going to look at the concept of orders and contract sizing. Okay, we are going to also look at how we're going to go a little bit practical on day one, on day two rather. That's tomorrow. We're going to be a little bit practical because we're going to look at, for people who are very new, how to open a brokerage account, how to place your first trade, how to open a demo account. We are going to look at all of those concepts. And of course, on the third day is when we're going to take it the notch higher a bit, because on the third day, I'm going to be sharing with you some basic understanding of how to analyze the market technically, okay, and how to analyze it technically, and how you can pick, trades with this technical analysis. So we're just going to focus on the key aspect of technical analysis, but what we're going to learn, we give you a very, very huge start into forex trading. Of course, after that, you will be added to the Telegram community. Some of you have already been added to the Telegram community. So from the Telegram community, we have opportunity to interface, to talk more. You can come with questions, and of course, you'll be opportunity to access some of the free seminars and trainings that I host. Okay, so, and of course, I also give you more information about how you can trade the forex market to win. Okay, and of course, you will also have access to some of our unique values, that we offer within the community, that I offer to my community. Okay, so let's get started for today, guys. If you're ready, type I'm ready in the chat box. If you're ready, type ready in the chat box. Let's go. We have awesome. I think there are some new people joining. So if you are just joining and you have not introduced yourself, go ahead and do that. Type in your name and where you're joining us from. Type in your name and where you're joining the call from. If you have not done that already, I can see a few more people just joining. Type in your name and where you're joining the call from. Okay. So, what's forex? I'm gonna try to be as basic. Yeah, thank awesome. Peace says she's ready. I'm ready too. I'm ready. Peace, I'm ready. Okay, so I'm gonna start as basic as possible. Yeah, awesome. Hey, see my friend from Gabon is right live and direct. Good to have you on the call. Pastor Shola, good to have you on the call. How is Malab? Is it Malabo? Gabon. Yeah, it's Malabo, right? How's Malabo today? Samson from Lagos. Good to have you, Samson. Good to have you, Samson. Yeah, we are ready to go. Great. Okay. So forex simply means foreign exchange. I mean, that's the most simple thing you need to know. And the concept and foreign exchange is just a trading activity that occurs in the financial market. So it happens when there is a buying and a selling of currencies. It happens what happens when people exchange different currencies is called forex. It's called foreign exchange. Okay, you buy dollar, you sell naira. You buy naira, you sell dollars. Or pounds or yen. So because the whole world is have economic transactions, business international commerce. So all of and the fact that there is travels going on all over the world, that necessitates the need for foreign exchange. People have to exchange their currency for the currency of the country where they are going to or where they are doing business with. Okay, so that's what foreign exchange means. It involves buying and selling of currency. So let's quickly go through some general facts about the forex market. I believe it's important for us to know. So here's it. The forex market is the largest and the most liquid part of the financial market. And that is why it is really, really attractive. That's why we have a lot of money in the forex market. The forex market alone is over $6 trillion in market capitalization. Over $6 trillion in market capitalization. So what that means is that the volume of money that is changed and the volume of money that is changed hands in the forex market every single day is over $6 trillion. So you just imagine that there is a market where $6 trillion is moving back and forth from one end to another, from one buyer to a seller, from a seller to a buyer. You just think about it. So it produces a level of liquidity because these transactions are instant transactions taking place. As one person is buying, one person is selling. And it is not in promissory note, it is in liquid cash. Okay, so now this makes the forex market very liquid. And guess what? When you have this kind of market, it brings about a level of volatility. So what that means is that there is prices, okay, of currencies are not stable for too long. You see them moving up, down. Why? Because there are many people buying and selling, buying and selling in fact, it happens almost on per seconds basis. Okay, so that makes the forex market very liquid, and that's why it is a very good market for money making. The liquidity and the volume makes it a very good market for money making. Okay, so I just told you that the market capitalization on a daily basis grosses over $6 trillion. So I made a point of that. Let's go on. Now, in the forex market, there are two major categories of traders that you will see. You have the institutional traders and you have the retail traders. Institutions and retailers, those are the major classes of people. Now, the institutional traders are the guys that actually make the market move. They are the guys that dictate the direction of the market. Why? Because they are the guys who have a whole lot of money. So we are talking about $6 trillion. These institutional traders have billions of dollars in the market, heavily invested. Okay, so a lot of banks are in the forex market. In fact, a lot of banks globally. Some of the biggest, trader of the forex market includes the likes of the Chase Bank, the HSBC of this world, the Citibank of this world, and so on and so forth. They are the biggest investors in the currency market. So for the currency market, you understand where you are. And I need you, this is where you need to pay attention to the information I'm sharing with you, because this is where I begin to shape your mind about how you begin to how you come into the market as a trader. Now, for those of us who have been trading it before now, it's also important to understand this information I'm about to share with you. Oh, good to have you, Kerry from Nigeria. Good to have you on the call. Great to have you guys. Now, reason is this. You see, institutional traders approach the market as investors. Most retail traders approach the market as traders. There is a big difference between investing and trading. Okay. Now, for people who are investors, they operate more like snipers. Snipers, okay? If you know snipers. Snipers can be at a vantage position. They will choose their position, but that position, they make sure it's a vantage position. And they can lie down there for days, for hours, waiting for the target to come to them. They don't run about chasing the target. They are not infantry soldiers. They stay right there in that position and wait until they have the right aim at what they are at their target. And then once the target gets into the position of their target, okay, they fire. That is the way investors operate in the forex market. Investors always wait. They look for a good position where they can maximize profit and minimize loss, where they can risk less and make more. So they operate like snipers. There's a lot of waiting that investors do. But you see, traders, they are like Oyinbo guys, you know. How much is this? How much is that? And, you know, price is whatever price they find it that they just buy. Oh, and a bag of rice is 30,000. Oh yeah, give me. How much is it today? Oh, it is 28. They buy. How much is it? Oh, it is 31,000. They buy. Those are traders. But investors will go to the market and say, how much is it? They say it's 30,000 naira. He says, okay, that's not the price I want to buy. I want to wait till when the price comes to 25. So investors wait. When price comes to 25,000 naira of a bag of rice, he buys. And then does what again? Wait. He must have done his calculation that, okay, you know what? When price is at 25,000 naira, it may not go further down beyond 24. Okay, so let me just buy at 25 and wait for it to go to 30,000. And then that's how investors operate. So there are two guys who are the two main guys in the forex market who participate, who are traders: the institutions and the retailers. And like I said, the institution is a little more like institution and retailers. Now, if you are flowing with me, just type flow in the chat box. If you are flowing with me, type flow in the chat box. You are flowing with me, type flow in the chat box, guys. Now, as a result of technology, forex trading is accessible to anyone who can learn the skill. Anyone who can learn the skill. So I intentionally put this, facts there, because anyone can learn the forex trading skill. It doesn't matter who you are, whether whether you're a full-time employee, you are an entrepreneur, you're a student. Anyone can honestly learn how to trade forex. Okay, and there's no age thing. In fact, I've seen a 10-year-old young man trading forex, although not in Nigeria, somewhere in the US. 10-year-old. So it's about, if I have the capacity to learn, then I can trade forex. So I want you to know, if you're listening to me and you've ever wondered, Can I really learn how to trade forex? Forex is complex, is a lot of things. It's because people have made it complex to you, and that's what I'm trying to do with this bootcamp. Help you to see how simple forex can be. Keep you within information that simplifies the forex trading process and mold you into an investor in the forex market. Okay, so even if you're a retail trader, your approach to the market will be like that of an institutional trader. So anybody can learn. Now look at this. This is more like a bloomer. Over 80% of retail traders lose money to forex trading. Over 80% of people who trade forex as retail traders, they lose money to forex trading. That's the truth. Now, this fact, I intentionally put it there, is important to know. Now, I have been in this industry for the past 5 years. I've not taken my foot off the gas since I've been in. I've been trading all through and I know where the mistakes I've made have been. People note the word retail traders. If you approach the market like a trader, you increase your probability to lose in the forex market. Because traders always chase the prices. The traders always chase the prices. Now, let's look at some of the good benefits of, trading forex. Let's look at some of the good. So, some of the good benefits of forex trading is the fact that forex trading startup capital is really low, as in to get started is low. There's no commissions or low commissions. There's no fixed lot size. When I mean lot size, I mean there's no fixed contract size that you should purchase or that you should order in the market. So it's not as if you don't have X amount of money, you will not be able to trade in the forex market. No. If you want to go into oil business now, if you don't have certain amount of money, you can't play in the oil industry. In fact, if you want to go into agric farming, or if there's going to be a cap to the kind of capital you can use to get started. The transaction cost, as far as forex is concerned, is very low, and the market is open 24 hours a day, all around the clock, Mondays to Friday. The forex market is open. Okay. I mean, in some cases, I know people who have funded with as low as $50, $30, to start trading and, little by little grow their account. So those possibilities are there. Now, what other thing do you need is good about the forex market? No one can corner the market. That's the truth. No one can corner the forex market. Like, like an industry where there can be a monopoly of the market. Okay, no one can corner the market. You have offer to leverage. You have offer for leverage. So you have opportunity to leverage. What that means is that all I have is $100, but because I enjoy leverage from my broker, I can take the same trade that somebody who has $1,000 is taking. We are going to talk a little more about that. There's deep liquidity in the forex market because there's a lot of money in the market, like I said earlier. So you talk about liquidity, ability to convert money, is there. It's easy for you to convert your money into cash, and you buy and you're able to sell, at a go. So there's nothing like I buy today, I have to wait for, like you have in real estate market, where you buy the land, then you have to wait for some years before the value appreciates, and then you have to sell. In the capital market, you buy this minute, the price goes up, you can sell the next minute. So there's liquidity in the market. There's low barriers to the entry in the market. So This means that you don't need a lot of certification and regulations, and you don't need a lot of things requirement for you to get into the market. All you need is, do you have the knowledge? Do you have the skill? Do you have a broker? And that's all you need to get started. So there's low barriers. Some industry is so very difficult for you to get into the industry. Okay. And when you talk about the forex market, there is a lot of free stuff everywhere. When you start the forex market, you don't have to start with your real money. So you don't have to deposit your money straight away. You can start with a demo account. It's free. You can use it to practice, or you call it practice account. You use that to practice, learn how to trade, and so on and so forth. So there are really a lot of free stuff everywhere in the forex market. Okay, let's talk about the things you wouldn't like to hear about the forex market. Some really ugly things about the forex market. The forex market has high volatility and risk. It's a very high risk environment. The forex market is high risk. I tell people, money that you cannot afford to lose, don't use it to trade the forex market, because there is a high probability of losing your money in the forex market. It's important to know. The market is highly volatile. A lot of things can change. Data changes. The forex market reacts to a lot of fundamental events and news globally, and they can affect your trade, either, whether they end up in profit or in loss. So it's important to know this. Please don't let anybody beguile you. Don't let anybody lie to you that, just either you're the one trading it, or you are giving your money to someone to trade it on your behalf. Know this. Or as some people are selling some robots right now, or whether it's a robot that is selling it to you, that is trading for you, I want you to know, whether it is you, somebody else, or a robot, you can lose all your money in forex market. It's a high risk market. But at the same time, it's a good market to make money from. Isn't that a little bit ironical? Now, the forex trading market, forex trading could be quite technical. The process of analyzing and understanding the best place to buy from or the best place to sell from, some people find it technical. Yes, it is technical, but it can be learned. Anybody can learn it. Anybody can understand it if you put your mind to it, if you decide to learn it. Now, there's a high turnover of retail traders. What I mean by this is this. There's a high rate of people who enter the market and get out of the market. There is every chance that you have met someone who will tell you, I once traded forex before. I lost all my money. True or false? And maybe we are even, that's even our story. Maybe it's the story of someone here. You've traded forex before and you've lost. Right? Is there someone like that here? So there's high turnover of retail traders. People just get tired of it. Oh my God. Oh, I've blown an account again. Oh my God, I've blown an account again. Oh my God, I've blown an account again. And before you know it, everybody, they're dropping up. But why have some people like us, some of us, been able to stay in the market for we've been consistent and we've sustained our activity in the market? It's because we are learning from our mistakes. We don't get angry at the market. When we lose, when we blow our account, we look, what is the lesson? What did I do wrong? What did I do right? And then we go back to make adjustments. And that's where the skill and the knowledge we get or that we have today come from. Because, oh, I got this wrong. By the time you check the chart, you back test, you realize that, oh, these are the things I did wrong. Let's talk about pips. This is one of the common terms you will be using as a forex trader. Pips is called point in percentage. Point in percentage. And it is the smallest price move in the forex market. Okay, so I give you an example. Let's say a dollar a US dollar to a euro is 1.4 euro. 1.4 euro, 1.400 euro. Okay. If the price moves from 1.4 to, let's say, 1.4001, that is a pip. That's a pip because there's been a movement. A movement has occurred, right? So that's a pip. Now, okay, I can't annotate right here. I'm trying to see if I can annotate, but I can't do that. So we'll leave that. Okay. Oh, you have blown several accounts. I know. I've been there before. I have been there before. I've blown so many accounts myself. It had happened to me a lot of time. Okay, so PIP. So that means for a lot of us on this call, we know what a PIP is. Price moves by a decimal unit, and that is what we call a PIP. Is the smallest price move. It moves from 1 to 2. Dollar to naira is 1, let's say 600. Then later it moves from 600 to 601. So that's 1 is a PIP. So that's a PIP movement from 600 to 601. That one is called a PIP movement. Spread is another term we need to be familiar with. Okay, and a spread is simply the difference between a forex broker sell rate and a buy rate when they are exchanging or trading currencies. So you have a forex trader who buys at a price and he sells at a price. So the difference between the price at which he buys and he sells is a spread. It is also calculated in pips. It is also what? Calculated in pips. So he buys it at 600 and he sells it at 601. That one is a pip, but it's called spread. Spread. The difference between a forex broker sell rate and a buy rate when they are exchanging currencies. The next thing you need to know is what we call the base currency and the quote currency. The base currency and the quote currency. Now, you need to be familiar with this because this is the way currency pairs are being quoted in the forex market. So you don't just trade one currency. Because it's an exchange, it has to be two currencies together. Euro, USD. USD, Japanese yen. Euro versus British pounds. AUD dollar, Australian dollar versus US dollars. That's the way. So that's the way they write it. So when they express it, the first currency on the left is called the base currency, while the second currency on the right is called the quote currency. Base and quote currency. So what that means is that if you see Euro USD, for example, and they put a number, let's say 1.400 in front. So what they are telling you is that a euro, the value of a euro expressed in dollars is $1.4. Okay, so the base currency and the quote currency. So you see a lot of example, a lot of example of this in the MetaTrader 4, which we use to trade. We talk a lot more about MetaTrader 4 tomorrow. Okay, so this is what it looks like. So you can see Euro USD. So Euro is the base currency, USD is the quote currency. Under it, you will see what they call bid and ask. Bid, ask, bid, ask. Okay, so a bid price is the price a forex trader is willing to sell a currency pair for. Okay, so a forex trader or a broker is out there and they show you their bid price. That bid price is the price at which the broker is willing to sell the currency pair. So in this example, Euro USD, they are willing to sell 1 euro at $1 $1.0010. You know, more like a unit of cents or so. So that's what it means. But look at the ask. The ask price is the price at which a trader or a broker is willing to buy a currency pair. So that means why they are willing to sell 1 euro at 1.00, they are buying it at 1.0020. Okay. So that's the difference between the ask and the bid price. Okay. We have leverage, lot, entry price, pending orders, and take profits. Now, all of these things you have seen there, that's going to be your take home. That's going to be your take home. Okay. So your take home one. Your take home one. You define the following terms. Define the following terms in the forex market. Okay. Leverage, lot size, entry price, pending orders. So then take profit and stop loss. So you see, after this class, you don't have to just quickly go to your Google or somewhere. So that's the take home. Is there in the chat box? You see it in the chat box shortly. So you take the take home and then we are going to review. You submit that to me on the group. We have two groups, one on the Telegram and one on the WhatsApp. Why did we create the WhatsApp? It's because we realized that some people are not on Telegram. So we have to put that on we have to create a WhatsApp group. But over time, we are going to get all the people on WhatsApp to, open a Telegram account, and so that it's more effective for us to work on Telegram. So we are going to migrate everybody eventually to Telegram. So whether you're on Telegram or the WhatsApp group, for now, just please understand with us. And so you submit your assignment, on the groups, okay, before 6 p.m. tomorrow. Before 6 p.m. tomorrow, submit your assignment before 6 p.m. tomorrow. Before 6 p.m. tomorrow, so you can see the take home. Okay, so we are going to make progress and continue by discussing what we call currency pairs or currency crosses. Now, what is a currency pair? Like I just shared with you, it is just two currencies, pair together. So like here we have Euro USD. Now, these are the major currency pairs we have in the forex market. They are the currency pairs that have USD in them, but these are the major one. Euro USD, we call them the major one because they are the most traded. In fact, the most traded currency pair in the whole of the forex market is the Euro USD pair. It's the most traded currency pair. Okay, it's the most traded. Thank you. Yeah, thank you, Kerry. Good to hear that from you. It's the most traded currency pair. See, you can train yourself to just become a Euro USD trader alone. Why? Because you understand that It's the most traded pair. There's a lot of volume in it. I tell people, if you can train yourself to just master a few, some of you can decide, like me now. One of the things I try to do, I have some key pairs I trade. The key pairs I trade the most include pounds USD, AUD USD, USD JPY, USD CAD, USD JPY, and Chef JPY. So you can decide that I'm going to be focused on the major currency pairs. I'm just going to focus on trading only Euro USD, Pound USD, USD CHF, USD JPY. That you can decide that that's going to be your major trading pairs. But we have other pairs. Okay, we have other pairs. We call these minor pairs. We have Euro versus pounds versus JPY, that's GBP versus JPY, pounds versus CHF, that's Swiss franc, pound versus Australian dollars, AUD, Euro versus JPY, AUD versus CAD. There are many other ones, AUD versus USD, Euro JPY, Euro CHF, and so on and so forth. We have so many of those crosses, but we also have all these other currency crosses. Okay, you can see all these other ones, but these are all the pairs that you're going to see in your MetaTrader 4. I just need you to understand them so that when you're trading them, you can design your psychology to focus on some given pairs. I know some trader like my mentor. My mentor trades any pair. He trades any pair. It's any pair where he finds a trade. But I don't tilt towards that approach. Reason is that before you analyze all the charts of each pair, is a lot of time. It's a lot of time. You realize, and don't forget, like I said, you're an investor. Okay, you can just say just 4 pairs. I'm just going to focus on these 4 pairs, and I'm going to analyze them and wait for the price to come and meet me at the place where I'm going to buy or sell. So I can advise, one of the things you can do, you can choose 1 pair from the major pairs, 1 pair from the minor pairs, 1 pair from the cross pairs, like this ones you're seeing, and you can choose 1 pair from these pairs. So if you have one pairs, we also have exotic pairs, but we are not going to go there today. We have exotic pairs, maybe in the course of our subsequent classes. After that, we are not going to discuss that in the bootcamp. Any other classes we may look at them. But so you can choose 1 each from these pairs and say I'm going to focus, or 2 each from them and say I'm going to focus on them. Now, one of the reasons why it may not be good for you to focus on the same categories of pairs, crosses, is this. Like, for example, you decide to focus on these major pairs. All of them has USD. So if anything happens to dollars, it means that all of these pairs, something will happen to them at the same time. If there is, for example, a news about USD or US, and it affects the forex market, if that news goes against you, that means if you are the type that is trading all these major pairs, these are the ones you just trade, that means that something is going to happen to all your trade at the same time. So sometimes that's why it's important you don't put all your eggs in one basket. Just be strategic, select the pairs you want to trade. Don't put all your trading, capital in the same categories of pair that can be easily affected by the market forces. Okay, now let's go on. Let's talk about market approaches to market. So we're going to be talking here, we're talking basically about analysis, market analysis. Now we have the fundamental. And you see, we actually have three, but for the purpose of this, I mean, for I'm more of I'm more of one of them than all of them. But I'm going to tell you, but there's a way you balance your approaches to the market. So fundamental analysis. Fundamental analysis is an approach of analyzing the market using social, economic, and political factors and data that affect the currency demand and the currency supply. So this kind of data includes data related to economic issues like employment, inflation rate, economic data like production index, employment index, and so on and so forth. So those can affect the market. Okay? You have political factors like elections that can affect the market as well. Who is coming in, especially for those major countries, who is coming in, who is going out, because the incoming of the government can lead to policy change that can affect economic transactions, political situations, and so on and so forth. There are also social factors like war between Russia and Ukraine. Is a social factor that affected the market massively. Okay? Especially people in the Euro bloc have been having a hit by the market since the market started, what do you call it? Since the war started. Yeah, you're right, Paul Omadara. Interest rate is one of the things that one of the economic data that affect the market. Interest rate. So that's what fundamental. Now, I will help you. I'll show you on this call. Platform where you can have access to fundamental data. Okay, I'm going to show that to you. And then let's go talk about technical. Technical analysis is just the approach of studying the prices of market and the volume in the market. So price is moving from from this level to this level. You look at the way it's moving. Most of the time, it doesn't just move straight away like that. It moves, goes up, comes down, goes up again, comes down, goes up. So in a zigzag version, you see price moving up and down, up and down, up and down. That's the way and as it is moving up and down, it creates key price levels in the market. So it is this movement of price that we look at and identify how it is creating key levels and structures. And it is these structures that investors and traders use to determine the best point to buy and to sell from. The best point to buy and to sell from. Okay? I don't want to expose us to charts today. I want us to have I want this progression to be seamless. I don't want you to see chart and start thinking from day one. So we're going to make a very smooth, simplistic approach, entry into progression on this training camp. So now, you see, with this technical analysis alone, now there are a lot of approaches, a lot of strategies that study of price and price movement gives birth to. There are thousands of strategy That's why you see a lot of traders are confused in the market today. They are using this, they are using this, they are using this tool, they are using this tool, they are using this tool. So one of the things I'm going to be doing is to show you how to be a clean technical trader without so many tools. I've used a lot of those tools. They have created a lot of confusion to me in the past. Mention the name. I've used a whole host of them, from the Bollinger to the moving average to the exponential moving average to the Ichimoku, cloud. Yeah, I've used so many of them, so many of those stuff tools. Okay, we're going to talk more about that. So if when I was learning forex, they taught me to be a clean technical trader, I would have had a faster growth and success in forex trading. Once again, don't forget the take home. The take home is define the following terms in the forex market: leverage, lot size, entry price, pending orders, take profit, and stop loss. Okay, that's your take home. Please make sure you submit it before 6 p.m. tomorrow. Make sure you submit it. Okay. Sentimental analysis. Okay, so sentimental analysis basically is some traders depend on the market mindset, what majority of traders feel or think, about a particular currency or about a particular fundamental data or micro data available in the market. How do they feel? For example, how do majority of traders think the war between Russia and Ukraine is going to influence the US dollars? So there are various tools that are available in the market that helps you to measure the sentimental levels in the market. So you can basically gauge all these sentimental levels. So if you understand that a good population of the market believes that USD is going to be affected negatively by a news, it will inform your own approach of trading. So you know whether you want to be buying or selling USD, because it means that majority of the market are saying, of traders in the market are thinking USD is going to be weak. Then that's not the time you want to start buying USD. That's the time you want to start selling USD, because when it's weak, that means majority of people in the market are going to be selling. When the general sentiment in the market is that it's going to be weak, that means that majority of them is going to be selling. But you have to be very careful. You cannot just pick on sentimental analysis and data alone and use it to trade the market. You will end up losing a lot of money, because those sentiments always change within a twinkling of an eye. Market sentiment changes very fast, very easily. Amongst all of these different approaches to trading or analyzing the market, the most reliable is the technical analysis. Technical approach to trading is the most reliable approach to analyzing the market. It's more reliable than the fundamental news and all of these other factors. Is more reliable than sentiment as well. There is a general maxim and belief in the forex trading market, is that history or the past always repeats itself in the market. And that is the basis, that's the premise for every technical analysis. Why? Because market usually always repeats itself in the future. Price will always do what it has done in the past in the future. It's just a basic psychology in the market. You need to understand that investors and traders, while trading, when they see certain level in the market where price had where price had a particular currency or price has had a major momentum, they always respect those levels. Let's say, for example, using Naira as an example, let's say we are trading, people, you just notice that when the price of rice was 15,000 Naira, a lot of people started buying rice. They started stocking rice at 15,000 than they did, than they did when it was 18 Naira. Then there must be something about 15 Naira and 15,000 Naira. Yeah. So there must be something about 15,000 Naira. Why were people buying at 15,000 Naira? Or all of a sudden you see that a lot of people were selling rice when it was 14,000 Naira. All the rice they had, they were just selling it. Then why did a lot of volume, why was there a sell momentum at 14 Naira, at 14,000 Naira? There must, so those data and are things that play out in technical when it comes to technical analysis. So in the future, when price comes back to 15,000, where people bought it, investors always, it becomes a prime decision level for a lot of investors, where they decide, do we start buying again at 15,000 or do we dump or do we sell off at 15,000? So in most cases, because people bought in the past at 15,000, you see market respecting that level. You can see a lot of purchasing, a lot of buying taking place in the future at 15,000 Naira. Because people sold, there's a sell momentum at 14,000 Naira. When price comes to 14,000 Naira in the future, you can see a lot of people also selling again. Those levels just become psychological level in the market. Again, we're going to be talking a lot more about this in our when we get to our technical class. That's on Saturday. Okay, I'm going to take a pause right now before we continue. So if this class you're learning and you're finding this class interesting, put in a 2 in the chat box, a 2 in the chat box, a 2 in the chat box. Your learnings and you find this class interesting, put in a 2 in the chat box. See, tomorrow is going to be a lot more exciting because see, for those of you who have never taken a trade before, hopefully tomorrow you get the opportunity to even take your very first trade, okay, just by opening a demo account and all of that. And if you have already done that, if you're already a trader, I mean, you want, tomorrow is also going to be, because tomorrow I will be doing, tomorrow is a session where I will be talking a lot about risk, how risk trading has been my joker in the forex trading market. Understanding risk, how I trade one. It's interesting. Sometimes you see we are losing 5 trades and we are winning only 2 trades, and yet those 2 trades will leave us in profit. It's really crazy. So tomorrow I'll be explaining, I'll be breaking it down. What do we do? How do we calculate it so that I can lose 7 trades and I win only 3 trades, and yet my 3 trades will give me profit in spite of all the 7 losses. So we're going to be talking about that tomorrow. Okay, so what are the trading sessions? Yeah, and I must tell you, if you have never learned how to trade by trading session, guess what? You have to, this is very important. Understanding your trading sessions are very important. For us, there are 2 trading sessions we target: London and New York. London, and New York. We only take trades that comes into our trap, the trap we set, only in London and New York sessions. So any trade that come in during the Asian session, Tokyo and Sydney, we let it go. That's one of the things that is helping. We only pick trades when they come into our trap net in London session and in New York session. Now, New York session in Nigeria time opens between 2 p.m. and 11 p.m. Nigerian time. 2 p.m. and 11 p.m. That's New York session. The Tokyo session is 1 a.m. to 10 a.m. 1 a.m. to 10 a.m. The Sydney session is 11 p.m. to 8 a.m. the following day. 11 p.m. to 8 a.m. You can see that Tokyo and Sydney are Asian sessions. So they happen mostly when we are sleeping here in Nigeria. Now, London session is 8 a.m. to 5 p.m. 8 a.m. in the morning to 5 p.m. So I'll be teaching you how to take trades between only London and New York session. So when we do our analysis, we understand that we only take trades when price comes into our levels, only during the London sessions and New York sessions. And the biggest session globally is the New York session between 2 p.m. and 11 p.m. That's when you see a lot of movement, massive movement in the market. That's the best time we look for trades. Okay? Is that clear? Okay. Okay, so that's pretty much where we're going to be taking a pause. I don't want this to drag too much. This call shouldn't be running to 1 hour 30 minutes. So we're just going to take a pause here. I'm going to take your questions. I'm going to take your questions, and then we can look forward to tomorrow. It's going to be explosive. Now, I want you to share this same link with as many people, or maybe with as many people as possible. Or if there's going to be a new link, I'll put it on the group with as many people as possible. Let's have more people who you think this information and this knowledge is going to help to get on the call tomorrow. So I'm going to take your question. Please let me have your question. Put it in the chat box, your question. Let's have a look at it. Okay. Let's have your question, guys. Come on. You can put in your question or show me some love by putting a heart emoji in the chat box. Put in your question or show some love, put in a heart emoji in the chat box. Or if you have question, you can just put it there. This call we close in the next 7 minutes. So let's see. Let's take questions if you have questions. So like I said, tomorrow, don't forget, our highlight for tomorrow is going to be understanding how to minimize your loss and maximize your profit. Win more with more losses. Did you get that? Win more with more losses. So even if you lose a lot, you still win. I'm going to be giving you a breakdown of how that works tomorrow. And of course, tomorrow, for those who are still part of the newcomers, we are going to be showing them how they can open a demo trading account tomorrow. All of that information I'll be sharing with you tomorrow. I'll give you more instruction on what we need to do ahead of tomorrow class as far as opening a trading account is concerned. I'll be giving you more information. I'll be recommending, possible brokers to us. I mean, the one I use basically, actually, the brokerage firm that I use, I will give you information so that if you want to use them as well, you're at liberty to choose your broker. I use these guys because they've been consistent. They've proven themselves over the years. They have registered office here in Nigeria. They are the biggest brokerage firm in Nigeria. And, I mean, I've never had an issue with them. Their payments are prompt. Their withdrawals are fast. Their deposit is fast. I just find them really reliable. So we'll give you more information on the group. So if you want to use them, you can equally sign up with them. I'll give you the link to do that. And then I'll give you also instruction on downloads you need to make ahead of tomorrow's class, the MetaTrader 4, both on your phone and on your laptop. Okay, we get that. Okay, Kerry is talking about 2 p.m. to 11 p.m. Yeah, 2 p.m. to 11 p.m. is the New York session, and that's like I said, that's where the biggest volume of trading is in the market. Okay, 2 p.m. to 11 p.m. That's the New York session. See, you will never believe, but this is the truth. Trading according to sessions is a master stroke in forex trading. Trading according to session. You don't just enter market anytime. You want to enter the market when the volume start building. When investors start putting in their money. So what I'm teaching you in this bootcamp is going to be more psychological than even technical. Oh my God, they just took the light in my house. Let me put on the gen. Okay, so they just took the light. Anyway, we're rounding off. But guess what? It's to teach you how. Thank you, Emmanuel, for showing some love. Thank you for showing some love. Is to teach us how to psychologically position ourselves for trading. Don't mix it up. This is the biggest value you are going to get in this bootcamp. It may not even be about the strategy I'm teaching you. In fact, I will not be teaching you so much of strategy at all. In fact, I will not be teaching you strategy, but I will be showing you how to identify key levels in the market. Okay, I will be showing you how to identify certain key levels in the market. Okay, but I will be helping you to have a mental shift, because the thing started between you becoming a successful, profitable trader and a loser is this mind, this psychology. And so and for you to get the right psychology, you have to think like the investors are thinking. What are these investors thinking? How are they approaching the market? And so on and so forth. Okay? You have to be thinking like them. So we'll be putting ourselves in that space. We'll be doing a lot of psychological tests and how we can put ourselves in the space where we think like investors. So we do a lot of mental exercising. That's going to happen on the third day. Okay, guys? Okay, so 2 more minutes before the end of this show. Yeah, okay, yeah, Kerry, sure, please. You're going to have the link for tomorrow on the group. You can invite your colleagues to join the session tomorrow. It's going to be a bomb, I promise you, by the grace of God. And don't forget, like I told you, someone asked me, AY, why did you decide to do this? And I told them, he said, if the value is $500, like you said, why are you doing it for free? I said, and I told him, I said, it's simple. It's just a give back for me. It's just a give back for me. It's just a give back for me, nothing more. Of course, I could have done this for free. For some money. But honestly, it's just a give back for me. I still pay my mentor up to today. I still pay him for some to be in his community. To be in his community, I still pay him to be my mentor who taught me, Mayo Wolabi. I still pay him to be in his community. Okay, so but he also taught me give back. He taught me how to give back. When you give to people, help people to grow, you achieve your own dream faster that way. Okay, so guys, thank you so much, love. Thank you so much, love, from every one of you. Thank you, Kerry, showing love all the way. Kerry, where you are from Lagos, right? Thank you. Is the class recorded? Yeah. It's recorded. It's going to be on YouTube, so you can review the class much later. Okay, so thank you, guys. That's the end of today's session. See you tomorrow again. Have a beautiful evening. Don't forget to do your take home. Okay. Make sure you complete your take home. If you don't submit your take home, I will boot you out of the class tomorrow. See you guys. Great night.